Hey guys, it's Eric from Momentum Options. In this training, we're going to be learning how to view the market through the eyes of a professional trader. In this video, we're going to be discussing why you should be using candlestick charts and how to read them. Now, candlesticks are extremely powerful and they help tell the story of where price has been, who is in control of price, buyers or sellers, and three, where price is likely to go next. So whenever we're looking at our candles, it's important to recognize they tell us a few things. One, they tell us where price opened and closed, and that's represented by the body. And they also show us where price went, the highs and lows. These are expressed by the tails or the wicks. Whenever we're looking at the body, if we're looking at a sell candle, it's important to recognize that sell candles open at the top and close at the bottom. This is the area where buyers and sellers really agreed on price. We don't have a lot of rejection. Nobody was not agreeing that price should be there. When we hit up into those wicks, we have rejection on this candle, for example, and that shows us that there were no buyers up there, right? So we can see that buyers and sellers were most in agreement on price right through there in that body. To the right, I also have a buy candle where I show you that price opened at the bottom and closed at the top. So here is Apple, the same chart. I just took away the open and close marks, and I should illustrate the high and the low. So you can see the sell candle went all the way up to 130.19 and went as low as 129.57. But again, price opened in 129.9 and closed near the low at 129.61. So sellers were in control of this candle, and we see that there were no buyers near the top. That was showing us an area of rejection. On the buy candle, we can see that price went as high as 131.06 and as low as 130.62. But really, price opened at 130.67 and closed about halfway to the top at 130.85. So buyers and sellers were most in agreement in that price range. And we can also see that we had some rejection near the high on that buy candle as well, which acted as resistance for a little bit. We can see the next few candles had trouble getting above that 131.08 or 06 spot. So it helps us identify areas of resistance even. Now, buy candles are typically going to be our green candles, and our sell candles will typically be red. Now, you might see in some of my other charts, I have studies turned on where, really the truth of it is all of my buy candles are hollow and all of my sell candles are filled in. So when sellers are in control, the candle is filled in, and when buyers are in control, the candle is hollow. So if you've noticed that difference going forward, just want to make sure you guys are aware of what is happening. And you can also see on this chart because I have the candle trend appearance on my candlesticks. Okay, so there are a few extremely powerful candlestick patterns that can give you clues as to where price is likely to go next, especially on higher time frame, like 30-minute, 1 hour, 4 hour, daily. Now, the first one I want to talk about are the bullish engulfing. So the bullish engulfing simply has a buy candle where the body completely engulfs, eats, encompasses, it totally makes up the entire body of the previous sell candle. And as you can see, these two buy candles are entirely bigger. The body is entirely bigger than the sell candle before it. And we can see that when this happens, the trend continues up afterwards. So we call this one a bullish engulfing candle. And again, it is very powerful. So start learning to recognize it. And it works the same way going down. We look for bearish engulfing, where the body of the sell candle completely engulfs the body of that previous buy candle. And here again, you can see once that happens, the trend is clearly down afterwards. That first one completely eats that buy candle, and then the rest of the day is down. At the end of the day, on the second bearish engulfing, you can see that sell candle completely eats that buy candle, and price goes down the next day. So it helps us identify direction change, which can be extremely powerful. If you're in calls and you see this happen, or if you're long and you see this happen, it lets you know maybe you don't want to be long anymore. The trend might be changing. And if you're short and you see this happen, or if you don't have a position and you see this happen, maybe you want to go long, right? So another really powerful candlestick pattern are our topping tails and our bottoming tails. So topping tails, bottoming tails, they simply show us an area of resistance, an area where price rejected very hard. Here you can see this candle with a lot of rejection at the highs. Pretty much everything above that line, or everything above that line, and even a little bit lower on that sell candle, which is green and filled in. So I just wanted to go back to that point I made. My sell candles can be green, but if they're filled in, they're sell candles. So we look for hollow candles when we're moving up, and this is our candle trend study. And we look for filled in candles when we're moving down. So on this sell candle, we see a lot of resistance, a lot of rejection at those highs. And you can see that price spent a couple days trying to get above that 395.89 level before we finally broke that resistance. Here we can see a couple bottoming tails. So we just simply find an area of support here. We can see that there's a lot of rejection at those lows, meaning there were buyers waiting down there. Now there are two different types of bottoming tails shown in this picture. The one on the left is a hanging man, and we can see that it was actually a sell candle. Although there was a lot of rejection at the lows, price still closed down on that candle. We can see it's a sell candle, it's shaded, it's filled in, so we can see that price opened near the top of the candle and closed at the bottom of that body. So price still drifted down, a lot of rejection at the bottom, but we do not have an enormous amount of buyers that are pushing price back up yet. And since it's a sell candle, and even though it has that long tail of rejection, we can still expect that price will probably drift lower and look for more buyers in that wick area where all those buyers were waiting. Price usually revisits that area on this type of candlestick, okay? Now, the other one I have shown here, I didn't mark it up, but I do want to talk about it. That buy candle where price does start to rise, that is a spinning top candle. We have a long tail of rejection. We have some rejection at the top, but we can see that that candle actually turned into a buy candle. It is hollow, so the body opened at the bottom and closed at the top, and we call that a bullish spinning top. And as you can see, price kept moving up, okay? So I just wanted to illustrate that one. But hammer candles are extremely powerful. And whenever we see these, long tails and price opened and went down to the bottom, pure rejection at the lows, price went all the way near the top and closed near the top. That is a very strong candlestick, and 99 times out of 100 signals that price is going to continue moving up afterwards. And you can see it did. Another extremely powerful candlestick that you need to be able to recognize is the doji. Typically, doji are found at the top of an uptrend or the bottom of a downtrend, and dojis show us strong rejection on both ends and price closing almost exactly where it opened. almost exactly where it opened, okay? You can't have a doji where you say, oh, the body's a little bit big. That's outside of that exception. We want the opening price and closing price to be almost exact. I mean, very close, okay? So on the second doji, you can see when price breaks the high or the low of a doji pattern, trends typically continue in that direction. So if we're looking at the first doji on the left-hand side of the screen, you can see once price broke below the low of that doji, we started moving down. And on the second doji, once price broke above the high, price started moving up. So sometimes these dojis can also be referred to as an indecision candle. We have lots of rejection on either end. Price opened where it closed. Again, I'd say 99 times out of 100, maybe it's more like 95, dojis are found at the top or bottom of trends, and when they're there, that is typically the end. If you find it in the middle of a trend, and you can, and it tends to be more obvious, you'll see that they're more of an indecision candle. So I just wanted to address the fact that when price breaks either the high or the low of that previous doji candle, trends typically continue in that direction. So even if you find that doji at the top of a trend, there could be that 1 out of 100 time. If price breaks above the high of the doji, the trend is likely going to continue. So really important. Want to make sure you guys are aware. So these patterns are simply designed to help us identify profitable trading opportunities and help us know, well, where the market is going, where we should be getting in, and where we should be locking profit before it's too late. Recognizing how to read candlesticks and all these different types of patterns is going to make you a better trader. And learning to read candlesticks, learning to identify bullish, bearish, engulfing, bottoming tails and topping tails, the hanging man, the hammer candles, spinning tops, and dojis. It's ultimately all about making you a more successful trader. So I hope you guys learned good about in this video. I will see you in the next session. Have a good one.